Hello, everybody. Thank you for joining us and attending this webinar on COVID-19, federal and local legislation applicable to the Act 2022 and 60 community. My name is Annie Mustafa. I'm the president for the Act 2022-60 Special Committee of the Puerto Rico Chamber of Commerce. This committee was created to bring together members of the new community, people who decided to make Puerto Rico their personal home or business home, and the Puerto Rican business community. One of its main objectives is to educate, and soon we hope to continue with another of our objectives, which is to create adventures and fun memories of our beautiful Puerto Rico. We appreciate and thank very much Grant Thornton, Joanelis Fernandez, which is the Business Development Director for Kibane, and the President of the Opportunity Zones Committee of the Puerto Rico Chamber of Commerce, Maria and Francisco Luis, our speakers, and the rest of their staff in putting together this valuable webinar and adapting it to address the needs of this community. And of course, we value and the support from our Puerto Rico Chamber of Commerce. And on behalf of our President, Jose Ledesma, thank you very much.
Thank you, Annie. And again, thank you to the Puerto Rico Chamber of Commerce and the Special Committee on Act 2022 for the invitation to speak to all of you today. First of all, and foremost, we at Kibane certainly hope that you and your family are healthy and safe and coping with the situation that has been imposed upon us due to this emergency of the COVID-19. As Annie mentioned, today we're going to be speaking to you about recent tax legislation and developments related to the emergency, and especially those related to your tax compliance and tax situation in Puerto Rico. First of all, and some housekeeping details. If you join us through audio, you can do it either through calling the toll-free number, the 1-800 number, or you can also join us through your computer audio. All the questions, please, will be addressed from the chat box below, so you can write down your questions, and if we are not able to attend those questions today during our session, we will certainly be taking a look at them and providing the answers to all the participants today. As you all probably heard, the session is being recorded, and the same will be available this afternoon, shortly after the webcast, in our YouTube channel, where you will you will be able to rehear the recording. We are Kibane. Everything we do every day with our people, with our employees, with our clients, with our community is driven by our global values. Our global values, clear, stand for collaboration, leadership, excellence, agility, respect, and responsibility. Through the years, we've been putting this into play every day, but lately, during the last 7 weeks of this emergency, we see that they become more important even so, especially the last one, responsibility, where we as corporate citizens have the responsibility of sharing and keeping you all updated with everything related to doing business in Puerto Rico, and that's why we are here today. There you have our contact information. Should you need to contact us directly, you will have this in the presentation you will receive later this afternoon. I'm Maria de Los Angeles Rivera, tax partner and IBC director in Kibane Grant Thornton, and today my partner Francisco Luis is going to be joining us to talk about, as I mentioned before, recent tax developments and legislation related to the current emergency situation. We also have there Joanelis Fernandez, our business developer director, information, as well as Annie as the president of your special committee of the Chamber of Commerce. Before we start with the topics that we want to discuss today, I want to bring your attention to a special site we have developed in our website grantthornton.pr. You can access everything we have published related to the COVID-19 and all the tools that we have available for you as business owners, as business, to be able to face the challenges this current situation provides to you all. So we really invite you to take a look at that special site and get acquainted with it and all the information we have there for you. The agenda for today, the first part will be dedicated to everything related to tax compliance and tax filings with Puerto Rico and the U.S., as well as recent tax communications issued by the Department of Treasury of Puerto Rico in connection with special benefits that they have come up with in order to help support the taxpayer in Puerto Rico during the emergency. After that, Francisco is going to explain from the federal side the legislation that had been approved during March and April related to the support and benefits for the taxpayers, including the Family First Coronavirus Response Act and the different new family and sick leaves that have been generated because of the emergency, and the CARES Act, especially the Paycheck Protection Program and the Employee Retention Credit. Please keep in mind that these legislations are far more extensive than just tax issues, but today we will be just covering the tax-related concepts. So to start from the filing and compliance side, we are in April. Today is April 30, time goes really fast. But usually this time of year is the time that everybody is running around trying to get their documents and filing their returns. Because of the emergency, the Department of Treasury has delayed the dates of filing of several returns. For example, in the case of your income tax return, which has not been extended before, if you had a due date of March 15, the new original due date for this return was moved to June 15. The same for example, the individual tax return that was due on April 15. Now the new date to file this return is July 15. The same for those that are due in May and June. Since these returns had not been extended, these are the original due dates, you have the possibility of requesting an additional time to file the return should you not be able to file it by the date of, let's say, July 15. The current law in Puerto Rico provides for a 6-month extension, and that extension takes April 15 filers all the way to October 15. The Department of Treasury has not expressed any different amount of possible extension of time. So as of today, we still have the possibility of asking for an extension for up to 6 months. As time goes by and the emergency continues to develop, we will probably see changes in those areas. If your return had been extended already, let's say you had like for example, a corporate return or an issue return that had been extended already, and that extended due date was March 15, the new extended due date is June 15. And for those that were due in April, May, and June 15, the new extended due date is July 15. Keep in mind that these returns were already extended. So if you're not able to file the returns by those days, and the Department of Treasury do not change those dates, you have no additional time to request to file these returns. Important, if you have to make a tax payment with any of these returns, because maybe your tax was not satisfied through the installment of the estimated tax or your withholdings, you make that payment on or before the date to file the return, the new date. The Treasury Department would not impose interest or penalties or surcharges for late payment. But the payment has to be made along with the return by the new date. In the case of those businesses that need to prepare and provide informative declarations, the famous 480 in Puerto Rico, those similar to the 1099s in the U.S., These returns or these declarations are usually due by February 28th of each year. In Puerto Rico, because since the beginning of the year, we have been facing different challenges. Remember, in January, we had the earthquakes in the southwest of the island. These returns were, the day to file this return was moved to April 15. But due to the COVID emergency, the new due date for this informative declaration is May 15. So your business is required to prepare declarations to the suppliers, for example, of services that you will receive. Please keep in mind that you must provide this by May 15. This date has not been changed as of today by the Treasury Department. As you are aware, in Puerto Rico, we file more than just income tax returns. We have several other filing requirements with agencies and municipalities. Here we list some of them and the changes on their due dates. If you need to file a corporate annual report with the Department of State, or if you have an LLC and you need to pay your annual fee, your original due date for those filings is April 15. It was moved to July 15 of this year. Regarding the municipal business volume of declaration, this is the one that you need to file with every municipality in which you are doing business. The original due date for these returns is usually 5 business days after April 15. So for this year, that date was April 22nd. The OGP office issued several letters regarding, the due dates for volume of business declaration, and the last one clearly stated that the new filing date for the volume of business declaration is July 22nd. Now, each municipality has the authority to establish how much more time through extensions or extension of time requests can they grant to the taxpayers in the municipality, up to 6 months. So it's very important that if July 22nd comes by and you're not able to file your volume of business declaration, that you keep in mind you need to ask for an extension to each municipality in which you are doing business, and depending on their assessment, they will grant up to 6 months of extensions to file the declaration. If you make your 100% payment of the tax by July 22nd, you're going to still be able to benefit from the 5% discount because of making the full payment. But if you choose to make your payments in the 2 installments, the dates for those payments have not been changed. So the first installment will be due by July 15th of this year, and the second installment will be due by January 15th of 2021. In regards to the personal property tax return, which is usually due on May 15th, PRIM has published that the new filing date would be August 1st of this year. We have also changes on the due dates for the sales and use tax returns. Those of you that need to file these returns because you collect sales and use tax, or because you import merchandise or goods into Puerto Rico, we put in there the new filing date for these returns. The same as for income tax. If you have to make any deposits of tax with any of these returns, no interest, penalties, or surcharges will be imposed as long as the payment is made by the new date. And basically, for example, remember that the monthly sales tax returns are usually due by the 20th day of the following month you're reporting. So, for example, those for April will be due on May, were usually due on May 20. Now this will be due on June 22nd. And the ones for May, for the month of May, will be now due by July 20th. The same for, the import monthly return. The due date has been moved 1 month ahead. And if you are required to make advance payments of your sales and use tax, like twice a month, those are the new dates. And again, they have been moved basically 1 month ahead. We have that's related to all the new rules for filing. That's very important to keep in mind, and to coordinate with your CPA or accountant, the ones that provide you the services of filing these returns, to be sure to comply with the new dates. What other benefits has been developed in Puerto Rico in order to help taxpayers face the current situation? Well, the first one is for self-employed individuals. In Puerto Rico, if you are a self-employed individual, you will get a $500 bonus, incentives from the government, $500. And this incentive is exempt from income taxes. It's only to be requested through SURI, the electronic platform, between March 30 and May 1st of this year. And it would only be paid to those self-employed individuals that had been registered as merchant by March 15th of this year. If the registration, the merchant certificate had expired, the merchant needs to demonstrate no later than May 1st of this year to the Department of Treasury that he was a bona fide self-employed and renew the merchant's registration certificate. The following two benefits are addressed to help taxpayers and employees in Puerto Rico to have more cash flow and be able to face, extraordinary expenses incurred because of the emergency. The first one, it's Circular Letter 322, which was issued as an extension of Circular Letter 2008 that was issued early in the year due to the emergency of the earthquakes. That circular letter, what provided, was something very similar to what we had during the hurricanes Irma and Maria, where an employer was able to provide certain payments to its employees or to its independent contractors in order for them to be able to afford any extraordinary expenses. The amount that was paid or is paid to the employees will be exempt from income taxes for them, up to $2,000 per month, up to a total of $4,000 during the period of February 1st until April 30. So today is like the last day. We haven't seen any extensions to this letter yet today. What payments will be eligible? Again, payments made by an employer. It doesn't matter if it's a resident employer or a non-resident employer, to a Puerto Rico employee or to a Puerto Rico independent contractor to help and support them in the process of any damages or losses suffered because of the emergency. Expenses related to the individual, his or her family, related to food, medicine, gasoline, lodging, medical expenses, childcare expenses, dependent care expenses, expenses for electric power, for potable water, etc., that has been incurred as a result of the emergency. Also, if the employer makes payments directly to the provider of certain services, especially repair and replacement of the principal residence or property that was contained in that residence, as long as the payments are made directly to the provider of the services, those will be also eligible expenses. The other one that we had is that Circular Letter 2023, and this one is related to special distributions from pension plans and IRA accounts to face also the new and extraordinary expenses incurred because of the emergency. Again, this is an extension of a letter that had been issued prior in the year 2009. And this procedure allows the beneficiary of a pension plan or of an IRA to receive distributions up to $100,000 with certain special tax treatment. Basically, the first $10,000 of the distribution would be exempt from income taxes, And the remaining up to the $100,000, let's say if you take the total 100, let's say the remaining 90,000 will be subject to a special tax of 10%. This tax must be withheld at source by the bank or the financial institution making the distribution, and the distribution must occur between February 20 of this year until June 30 of this year. If the withholding is not made at source, the full amount, the $100,000, would be taxable to the individual receiving the distribution at the rate would apply to him or her when filing income tax return. So very important that withholding is made at source. Change that happened like a couple of weeks ago was the part of the process to apply for this special distribution was to provide a document with all the information required, but that document had to be under oath before a notary public. Because of the emergency and because it was being very hard to find a notary public to be able to execute this document, the Department of Treasury waived the requirement of the oath statement. Still, the taxpayer, the individual, must provide all the information requested on the document, but it does not need to be executed before a notary public. And again, what would be eligible expenses to be able to get the distribution? Well, those incurred to compensate losses or damages suffered, extraordinary and unforeseen expenses due because of the emergency, including the loss of income due to the curfew declared by the governor. And important, the original letter issued early in the year, the 2009, was only applicable to residents of the municipalities where the earthquake emergency was happening. Now, with the 2023, these provisions apply to residents of all the 28 municipalities of Puerto Rico. If you make payments to suppliers for services rendered, you know that in Puerto Rico you're required to withhold, usually it's in general terms the 10% tax on the services rendered. That percent can change depending on who your supplier is and whether they have a waiver or not. The Administrative Determination 2010 allows you as a withholding agent not to make that withholding on those services payments. Payments made between March 23rd and June 30 of this year, but also the service provider can request you to make the withholding anyway. And that's important because for some services provider, if they qualify for the optional tax, they're required by law to satisfy 100% of their tax through withholding or through estimated tax payment. And if they're not, if they're not withheld the tax, they might need to make estimated tax payments. So they might as well elect to have you withhold the tax. There were some changes in Law 40 regarding this item, but it applies only for tax year 2019. So for 2020, which these payments will be made during 2020, the requirement still is there to satisfy the tax through withholding or through estimated tax payments. And talking about estimated tax payments, if you were not able to make the first and or the second estimated tax installment for 2020, please know that if you make the payment during or along with the third and the fourth installment, you will not be charged any interest or penalties for not being able to do the first two. But the underpayment tax must be covered along with the third and the fourth installment. And if you are a reseller of inventory, please know that during the period of April 6 to June 30, you will not be required to prepaid or pay upon importation or pay local purchases of inventory for resale, the sales and use tax. You will get a temporary exemption certificate and it will be issued through SURI. And that would allow you to buy and import inventory for resale without having to make the payment or deposit of the sales and use tax. Important. If the item is a taxable item, the tax will be collected on the final sale to the consumer of the item. So it's not that the item will be exempt from sales and use tax. Before we move to the federal side, I wanted to share with you something that is being cooking in our legislature, and it's a bill from the House of Representatives 2468, which it's looking into providing additional benefits to taxpayers. This bill has not been approved. It's still under the consideration of the Senate. So we will keep looking into it, and whenever it's approved and signed by the governor, we'll be issuing a taller to keep you updated of changes. But there will be some of the provisions that this bill is proposing to adapt into Puerto Rico income tax law in order to provide more support and sustainability to the taxpayer. First, they're proposing a local employee retention credit, similar to the one Francisco is going to be explaining later on from the federal side. But if you are able to benefit from any of the federal benefits and credits, please know that you will not be able to double dip and get a local employee retention credit. Also, they're proposing to bring back NOLs carryback. In Puerto Rico, we used to have NOL carrybacks a long time ago. They were eliminated, but this bill proposes to bring them back, and the carryback will be for 3 years back, but limited to taxpayers with volume of business of $10 million or less. It's also proposing a temporary exemption of 3 months of the sales and use tax for B2B services and designated professional services, and provides the Secretary of Treasury the ability to extend that temporary exemption for 3 more months. It also postpones the new alternative minimum tax on corporations of $500, the minimum $500, and most importantly, it's also proposing to provide that any benefits or subsidies, credits that you received from local or federal governments would not be income for income tax or volume of business tax. This is very important because if it's not, if the law is not changed, any, like for example, forgiveness of the loans that Francisco is going to be speaking about, or any of the credits you might get, will be taxable, and therefore that will reduce the benefit you're getting. Also, in an effort to attract more collections to the government's funds, because of the situation, they're proposing a special rate on unrealized capital gains of 10%, and this will probably apply to some of you which still have those gains that are during the 10-year period of recognition. The new rate would be 10%, and dividend distributions to 5%. Still, these are under consideration of the legislature, and as soon as they become final and with any changes, we'll certainly communicate. Living in Puerto Rico, we also have some requirements to the IRS, and people in Puerto Rico, in addition to filing their Puerto Rico returns, also sometimes need to file U.S. returns. So the IRS also has communicated some benefits or some delays on the filing of tax returns. And specifically, they have defined that any affected taxpayer, and the way they define affected taxpayer is any person, individual, corporation, partnership, trust, state that needed to make a payment or file a listed return between April 1st of this year and July 14th of this year is considered an affected taxpayer. So if you are one of these persons, please know that the new filing date for your returns has been moved to July 15th. The IRS, though, has expressed that if July 15th comes by and you are not able to file your return, you'll be able to to ask for an extension of time, but that extension will not be more than the date you would have obtained under normal circumstances. For example, an individual that needs to file by April 15 will usually get a 6-month extension until October 15 to file their return. If July 15th comes by and you're not able to file your return, then you will be able to ask for an extension, but it will only be a 3-month extension because it's limited to October 15. Okay? So please keep that in mind, that the extension will not be the usually 6 months, but it would be only 3. And this would apply also for corporations, the 1120 series. Also, it's July 15. The same for partnerships, states and trusts, state and gift tax returns, GST tax returns. All those, the new date to file these returns is July 15. Important also, if you also needed to make some estimated tax payment during that period of time from April 1st to July 14th, please know that the new date is July 15. As I mentioned, the affected taxpayer would be any person that needed to make one of those payments or file any of those forms between April 1st and July 14th of this year. This section of days also applies to any action or other forms that need to be included as part of any of the listed forms, including the election to defer capital gains that are invested in opportunity zone funds. The 180 days will also end by July 15. So with that, we finished the compliance side from the Puerto Rico and U.S. side. And now I leave you with Francisco, who is going to talk about the recent developments at the federal level regarding the COVID-19 emergency. Francisco.
Thank you, Maria, and thank you to the Puerto Rico Chamber of Commerce for giving us this opportunity to chat with you and to discuss all of these pertinent matters. It's no secret that we have a significant and a complex tax compliance systems in Puerto Rico. And as you have heard, it has complicated a little bit more now with all of these extensions and all of these temporary provisions that Maria just went over. Now, like if this was not enough, we have on top of this, these 2 new federal legislations that we need to comply with them, but certainly they also provide some economic stimulus to businesses, and they go over them to explain you what are the implications and what are the benefits that we can take advantage of. I see a couple of questions in the chat. We're going to address them at the end, so we do not. We're going to get there at the end, and we're also going to have Jose Ledesma Fuentes to give us some words at the end of the presentation. So the first act that we're going to discuss is the Family First Coronavirus Response Act. This act was approved on March 18, 2020. Once during that week, we were already sent home by the lockdown issued by the governor of Puerto Rico. Now, one of the most important things about this law is that the effectiveness of this law is April 1st, 2020. And this is important because this new law provides for certain measures that applies once you are under a lockdown. And Puerto Rico was on a lockdown before the effectiveness of this act. So this means that during the month of March, anything that we pay to our employees is not covered by this law. I'm going to explain you later that we have a mechanism under the other law to have a stimulus for whatever we pay during March. But any compensation paid to our employees during March is not covered by the Family First. But what happens after Family First? Where after Family First, we have on one side some new modified benefits for our employees, specifically with respect to the family and to the sick leave that are already in the law. But also we have some mechanism or some benefits for the employers to absorb the additional incremental cost that they're going to have to come up with these benefits for the employees. Let's start with the family leave. The family leave, this leave applies to employers that have less than 500 employees. It applies to all employers with less than 500 employees. And if we have a group of related entities, we have to see under the rules and regulations that apply to labor laws. And we are not labor lawyers. Maria and myself, we are tax CPA. So this is a caveat that we have to make. But this applies under the rules for labor law, how to determine when you have a group of related entities, whether or not you surpass the 500 employees. And you have to see some subjective factors, like, for example, if you have common management, or if you have a centralized human resource department that provides services to all of the entities, or if you have common ownership. You have to see all of those factors to see whether or not a group of related entities will be counted as one to come up with the 500 employee requirements or not. But the truth of the matter is that if you have less than 50 employees, you can request a waiver to not be forced to comply with this new leave. If you can demonstrate that the compliance with this new license will jeopardize the viability of your business. And this applies, this new family leave or this new modification of the family leave applies to any employee that already have 30 days of working relationship with the employer. Typically, the standard family leave applies once the employee have at least 1 year of employment or at least 1,250 hours of employment. But in this case, this new leave that I'm going to apply to any employees that already have 30 days of employment. And what's the new leave? Well, the leave provides the employee a period of 12 weeks that the employee has to be at home taking care of a child under 18 years old, go to the school because the school is or the child care is closed because of the lockdown. Actually, that's the situation in which we are right now. We are ordered to close, so all of the schools are closed. So any employee that has to remain at home taking care of his child under 18 years old have the right to claim this leave. And the leave will provide the employee, out of the 12 weeks, 10 weeks with pay. So the employee is going to have 2 weeks without pay, but as you're going to see, the employee can combine with the sick leave in order to get paid also for those 2 weeks. But under the family leave, the employee have 12 weeks, out of them, 10 are going to be with pay. And what's the pay that you have to pay the employee? Well, you have to come up with the regular pay of the employee, and you're going to discount that to 2/3 of that employee's regular pay rate. But there's a cap per day that the actual amount that you're going to pay for the family leave is not going to be more than $200 per day. So the actual total amount of maximum exposure for the employer is $10,000 if you calculate the $200 per day out of for the 10 weeks. Now let's go to the emergency paid sick leave. And also this is a modification of the traditional emergency sick that we already have in our labor regime. The same caveat with respect to the application for a group of entities. It applies to employers with less than 500 employees, and similarly to the family leave, the employer with less than 50 employees can request a waiver in order not to be forced to comply with this new leave. And this new emergency leave, it will apply under 6 circumstances. The first 3 circumstances are qualifying reasons that apply specifically to the employee. And the other 3 circumstances are not specifically directly related to the employee. The first 3 reasons are, for example, if the employee is subject to a federal, state, or local quarantine order, as we are right now, or if a healthcare provider advised the employee to be quarantined, or if the employee is having the symptoms of the COVID-19 and needs time to get a medical diagnosis. If one of these 3 reasons happens, the employee has the right to request this emergency paid sick leave, and the actual pay in this case is going to be the regular pay rate. We're not going to discount it to 2/3 as we did with the family leave. In this case, it's the regular employee pay rate, but the cap instead of $200 is going to be $1,100 per day. So the actual amount is $5,110 per day for the total. Now, reasons 4 to 6, as I mentioned, are not specifically directly to the employee. Those are situations that is someone related to the employee. Like, for example, number 4 is when the employee is caring for an individual who is subject to an order pursuant to paragraph 1 and 2, as I mentioned in the other slide. Or number 5, and this is how you can combine with the family leave, when the employee is caring for their son or daughter whose school has been closed or the place of care is not available due to the COVID-19 precautions. Number 6 is a flexible reason that's still open in order to provide the Secretary of Health to allow for other circumstances to apply this new emergency pay sick leave. And in this case, the pay is going to be the same as the family leave. It's 2/3 of the employee regular pay rate with a cap of $200 per day. The maximum duration time of the leave is 80 hours, so 2 weeks that you have here. And in this case, there's no minimum employee period requirement, like, for example, we have with the family leave that I explained you that you have to be employed at least 30 days. In this case, there's no employee requirement. So if you have a new employee, theoretically, on March 31st, as of April 1st, that employee has the right to request this employee emergency sick leave. Now, so far we have been talking about the employee benefits. Let's see what are the employer benefits for this. And the first benefit for the employer is that the employer is exempt to pay the 6.2% of the Social Security on the employer side of the FICA on the compensation paid for this family and sick leave. So the employer is going to be exempt on the Social Security, and in addition to that, it's going to get a credit for whatever it's paying among those wages for the family and the sick leave, and it's going to absorb those wages against the rest that the employer is paying. Like, for example, in the case of the family leave, you're gonna account for all of those $200 per day that you are paying for the employees, and you're going to absorb that against the rest of your payroll taxes, because not all of the employees are going to be subject to the family leave. In the case of the emergency sick leave, you have to account for if the reason for the leave is reasons 1 through 3, you're going to have a certain pay. If the reasons are 4 to 6, there's a different pay, but whatever you pay, you're going to credit against the payroll taxes. And what happens if the amount of the credit is in excess of the payroll taxes? For example, let's say theoretically that all of your employees are under the leaves. So in this case, the IRS issue form 7200 in order to request an advance refund over that credit that you have in excess of your payroll taxes. And the guidelines issued by the IRS is that they are going to be requesting those refunds within a 3-week period. So you have the mechanism in order to convert that in cash as soon as possible, or at least within the 3 weeks periods. That was Family First. Now let's go to the CARES Act. As Maria mentioned, this CARES Act has over 800 pages. It's a lot of different laws that we already have in our regime. It amends labor laws, it amends tax laws, SBA programs, and we're going to be addressing aspects of new loan that we have, the hot topic, the PPP, the Paycheck Protection Act, including the new modification and the new funds that were approved last week. And also we're going to be addressing the employee retention credit, which is a credit for that we discussed for the Family First, but this is quite different. And I have to mention, to have this right from the start, these two programs are mutually exclusive. So you cannot take advantage of both. If you decide to apply for the loan, you're not going to be able to claim the employee retention credit, and vice versa. If you take the employee retention credit, you're not going to be allowed to take the loan. So you have to decide in which case you want. So let's take a look at each of the programs. As you know, the CARES Act initially allocated $350 billion of funds to issue these new loans that we have. Last Friday at noon, President Trump signed into law the Amendment Protection Program Healthcare Enhancement Act, assigning an additional $310 billion to the program. And out of these, $60 billion were focused specifically to what they call small banks with less than $50 billion in assets. And one of the main advantages of these loans is that they are 100% guaranteed by the SBA. You don't need any personal collateral, any business collateral. It's just 100% guaranteed, because as you will see, the intention of the loan is to become a grant if you comply with the requirements. And how do you calculate the maximum amount of the loan? Well, the loan you have first, since this is a paycheck protection program, the rationale that we're going to use to calculate the loan is based on payroll. But we have to decide, we have to define payroll, and we're going to get to that within the next 2 or 3 slides. But let's take, for example, now that you have to calculate that monthly payroll that you have, and you're going to calculate that, multiply that for 2.5 times, and that's the maximum amount of the loan, and the cap of the loan is $10 million. So you have to calculate your monthly payroll for the 2019, and in case that you were not in operations during the full 2019, you're going to calculate the payroll that you incurred during the months of January and February 2020. So let's say that you are a startup, that you start operations during 2020, you are eligible for this new PPP. And this applies also to employers, so in this case, less than 500 employees. And now we have a different criteria than the one that we discussed for the Family First. This criteria is based on the affiliation rules that the SBA has in their guidelines. So you have to go there to see when you have a group of related entities, whether or not you are surpassing that 500 employee requirements. And the 5 employee requirements is a general rule, but you have to see what's the industry size standard that the SBA issues for your business, for your particular business, and see what's the that you have. And this program applies also to self-employed. So we're going to get there, because the self-employed can also secure their net income from their operations through the PPP. In the case of restaurants and certain hotels, the 500 employee rule is determined based on the location. So you may have, for example, the same legal entity, like For example, let's say that you have a restaurant in San Juan and you have a restaurant in Caguas and another one in Ponce. Each location, even though it's in the same legal entity, each location is counted as one for purposes of counting the 500 employees. So you could have up to a potential scenario. And not-for-profits that qualify under Section 501c3 under the federal law can also apply for this PPP. And this is very important because typically non-for-profit entities are not allowed to request this type of program under the SBA. But in this case, there has been made an exception. And if the entity has an exemption under Section 501c3 under the U.S. Code, it will apply and it will be eligible for the program, for the loan. Now, the lender has to make certain certifications, and probably you have heard about some cases that some lenders had to return the loans like Check Shack and Ruth's Chris, etc. Because one of the certifications that you have to make as a lender is that the uncertainty of the current economic conditions makes necessary the loan. And for example, the issue with those companies that I just mentioned is that since they have access to the capital markets, they have an option, but the small business doesn't have that option, and that's why this has been a hot topic and a lot of discussion about this. And also, you have to certify that the main purpose of the loan is to pay payroll. I mean, the loan, as you're going to see, has some very attractive interest rate, for example, but you cannot use this as working capital for other things because you have to certify that the main benefit or the main use of the loan is to pay payroll. And also you have to certify that you don't have any other loan or any other application with the SBA during the year 2020 for the same purposes of securing your payroll. This purpose. Payroll is any compensation that you pay to your employees. At the beginning, there was discussions or doubts about whether businesses that pay independent contractors, whether those independent contractors or the amount that you pay to them will count as payroll for these purposes. And the answer has been very expressed in some of the SBA guidelines. You cannot use those payments as payroll costs because if those independent contractors have their own mechanism to request their own loans, but since they are not employees, they are not payroll. So anything that you pay to your employees in terms of salaries, wages, commissions, tips, any payments for vacation, parental, family, and sick leave, not the one that we discussed under Family First, but the rest of the sick as payroll. And also if you pay any retirement benefits that you contribute or that you match for your employees, you will count also that as payroll. And in the case of the sole proprietors or independent contractors, they can also apply, even though they don't have any employees, in order to secure their net income. The cap, so this is for purposes of payroll cost definition per employee, is that you cannot go over $100,000. And one of the questions that we had at the beginning was that when you have an employee, let's say that you pay the employee $110,000 per year, do you have to rule out that employee entirely or just the excess? And that was also explained by the SBA is the excess. So you can count the first $100,000 as payroll cost, and the excess is the one that you're going to eliminate from your formula. That's why I mentioned here that you cannot count the compensation in excess of $100,000, and also any compensation that you pay for the sick leave that we discussed under the Family First law. Since you're gonna get a credit for that, you cannot count that as payroll for purposes of the loan. The most attractive thing about this loan is that you can get a full forgiveness if you follow the requirements. And what are the requirements? Well, first of all, you're going to start counting 8 weeks after you get disbursement from the loan. So let's say that, for example, that you get your loan disbursed today, April the 30th. So commencing tomorrow, May 1st, you're going to count 8 weeks. And during those 8 weeks, whatever you pay in payroll, in mortgage interest and rent, and in utilities, that's the maximum amount of loan that you're going to get, or loan forgiveness that you're going to get. However, there's two particular caveats that you need to be aware of. One of them is that out of that total possible loan forgiveness amount, 75% of it has to be payroll. And if you have a reduction on employee requirement, on employee headcount, the reduction in the headcount, the proportion of the reduction in the headcount is going to also reduce the amount of the loan forgiveness. Let's to see how this relates. EIA has 1.2 million of total payroll costs during the entire year. So you have an average per month of $100,000 of payroll costs. If you multiply this for 2.5 times, you get a maximum loan of $250,000, which is less than 10 million. So this is the total amount of your loan, $250,000. During the 8 weeks after the disbursement of the loan, and these 8 weeks have to occur before June 30, 2020. This is the real clock that we have, that the amounts of disbursed of payment that you're going to account for has to occur before June 30, 2020. So let's say that before that date, you pay in payroll costs, mortgage interest, and utilities $220,000. So you get a loan forgiveness of that amount, because if you comply with the requirement that 75% out of it was also payroll costs. So you end up with a loan of $30,000 because you had a forgiveness of $220,000. But let's play into the headcount as well. Let's say that, for example, during the period that you have to account for the base is from February 2019 up to June 2019, or January 2020 to February 2020. That's the base period that you're going to have to account for, and it's your choice. You're going to select the one that's most convenient for you. And that's the base amount of employee headcount that you're going to compare with the employee headcount that you have when you are paying during the 8-week period that you are counting for the loan forgiveness. So let's say that, for example, during the 8 weeks, you have 30 full-time employees, but during the base period, you have 50 employees. So
okay, we are back. We are having some energy power issues, so we'll be taking over from the place Francisco was disconnected. We were talking about the employee retention credit that was also included as part of the CARES Act. As Francisco mentioned at the beginning, if you benefit from the Paycheck Protection Program, you are not able to benefit from the employee retention credit. So both of the programs are mutually exclusive. The employee retention credit, and again, this is at the federal level. Remember, I told you before that something similar is being under consideration of our local legislature, will apply to employers that were carrying a trailer business during the year 2020, and with respect to any quarter of that year, the employer's operations have been fully or partially suspended due to the government order, like the emergency that we are on, or the employer has a 50% decrease in revenues when compared to the same quarter in 2019. So once the employer's revenue exceeds 8% of the same quarter for the previous year, for 2019, then that quarter will no longer qualify for the credit, for the employee retention credit. And this has to be computed quarter by quarter. Also, tax-exempt 501c organizations can also apply for the employee retention credit. There are some special rules to what type of employee payroll this credit will apply, depending on the amount of employees that the employer has. If the employer has more than 100 full-time employees during 2019, only wages paid to employees who are not providing services because the operations were suspended due to the government order or has been a 50% decrease in revenues within the quarter. In the case of those with 100 or less employees, then there is no limitation on what employee qualifies. All the employees will qualify. Also, the qualified health plans expenses paid to the employees will also be considered eligible wages. So just to summarize and to wrap up this part, two important Q&A that the IRS has answered regarding the CARES Act and the leave under the Family First. The first question is whether an eligible employer may receive both the tax credits for the qualified leave, the sick leave, and the family leave that Francisco explained, and also the employee retention credit under the CARES Act. The answer is yes, but not for the same wages. The amount of qualified wages for which the employer can claim the credit cannot include the amount of the sick and family leave wages under the Family First, because of course on there you get another credit, so you cannot get a double dipping. And the other question that we have talked about it before is whether an eligible employer can receive both the credit, the employee retention credit, and the Paycheck Protection Program loan. And the answer there is no. The employer cannot receive both credit and the Paycheck Program loan, even though part of the loan is not forgiven. Once the employer receives the loan from SBA under the Paycheck Protection Program, the employer cannot claim the credit for the employee retention. So with that, I know we have several questions on our chat box. We have run out a little bit over the time due to the technical issues. We will take care of the questions during the rest of the week, and we'll provide the answers to all those questions to you via email during the probably early next week. With that, I leave you with Jose Ledesma. I think he is around. Let me just
Okay, so I thank you so much, Maria de Los Angeles Rivera and Francisco Luis, for this incredible orientation. This is brand new legislation that a lot of businessmen here in Puerto Rico, business people in Puerto Rico, are not familiar with. There's a lot of incentives that companies need to apply. These are very urgent for the businesses, and my role is more on the lobbying side to ensure that we have additional incentives. I'd also like to thank Joanelis Fernandez and Luis Carlos Marcano, who have always been very supportive of our initiatives in the Chamber, and also Ani Mustafa from the Act 2022 Committee. We have been remaining very active these days. We're working on some issues related to the Act 22 community, and I do believe that this is a growing community. We would like to have more Act 22 members in the Chamber. So with that, I leave you, but this is a very good information related to this legislation, and it's not so easy to understand, not so clear-cut, but there's some definite opportunities here for companies to receive a very significant level of support to be able to survive this big pandemic, which is a very situation for the whole economy. So thank you so much, and have a nice day. Thank you.
Thank you, Jose. And I have questions here regarding the presentation and the recording. Please be looking into your emails this afternoon. You will be receiving both the PowerPoint presentation and the link to our YouTube channel where you can find the recording of this presentation. And you will also have there our email addresses where you can write us directly if you wish so. There, I leave you with the different channels that you can get in contact with us and obtain all the information and update data regarding what's coming on and going on into Puerto Rico. Especially, we have an app that you can download into your iPhone or your Android, and you will get all the notifications as to new articles and new developments into Puerto Rico. So with that, we leave you. Sorry again for the technical inconvenience. Nowadays, it's kind of a normal thing, but we certainly hope to be able to provide you, detail and last-minute information. Thank you, and have a nice day.